The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Mark with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. It's nice enough to come on and talk about what's going on in the world of commodities. If you're watching this video, you see Shawn on this phone, and for whatever reason, we had the most incredible time getting this thing to work. So, Shawn, appreciate your patience, man.
Yeah, it's good to be on the call. However we can do it. So
right on, man. Just someone must have cut the string on the pop cam between us. All right. So, Shawn, last week, maybe the week before, you had talked about you expected to see a bottom in the marketplace. I think we saw that bottom pretty early last week, where we saw a 3 in front of corn, and December corn was flirting with the 3 right in front of that. And this week we've seen since then we've seen a pretty big rebound, especially this week. So I guess, Shawn, as you look at your data and you start looking at your stuff, do you feel like we hit that bottom and now we're coming back out, or is this more one of those dead cat bounce type things that we see in the market sometimes?
Well, I think we made a bottom, a part of probably a bottoming process. I think the reasons that we bottom are, one, warmer, drier weather pattern first half of August. Certainly brings some weather premium back into the soybean market. We have some extremely hot, dry weather in the West grain belt, especially the Canadian prairies. So the canola market, for example, and the spring wheat market also saw some weather premium. And so when you start to get some short covering in a market that's heavily short, they all tend to be short all the grains. And so they just tend to buy them all back to various degrees. And I think to some extent, that's one thing. The other thing for like, especially on corn, we've seen export inspections up 30% year over year for the last 3 weeks in a row, meaning it looks like we found a level where buyers are wanting to be very, very aggressive, meaning it looks like we found a floor price that can move the grain that needs to move. And I think the market was looking for that sign, and it found it. The other factor, more of a macro factor, is that, as everybody knows, the AI Magnificent Seven big tech stocks that have been running up month after month after month after month have been attracting all this capital. What the big macro traders do is they buy one asset and they short another asset as a hedge. There was a big trade going on where they were borrowing money in Japanese yen, and then they were taking that very, very low cost capital, buying the Mag 7 stocks, buying precious metals, buying crude oil, and shorting things like grains. And if you've been noticing, the yen has had a huge bullish reversal back up, and it's blowing up these macro trades. So we've seen gold and silver and copper get completely obliterated. We've seen oil really take it on the chin. And of course, the Mag 7 AI stocks, had a huge correction on this unwind of this cross yen carry trade. So I think, and so what happens, that means shorts in the grains have to buy some of those shorts back because of a macro trade. So you put all these things together, Casey, and it just kind of set the bar that we priced in about everything you could price in on the bearish side, and then we've started to change that just a little bit, and we've gotten ourselves a rally here. Is it up and away from here? I don't think so. Harvest is coming, even with a warmer, drier pattern. I don't think a Western-based grain drought is going to create the kind of short soybean crop that takes it, to back to the teens. I don't think so. But what it does do is it gives farmers a chance to sell a rally, a better price than they had before for those bushels that they absolutely positively have to move and plan on moving before harvest or at harvest. This is an opportunity to make sure you sell a rally instead of selling into a hole like we were several weeks ago when everyone was panicking and saying you got to settle all here. We have a shot here to sell a better price. May not be the price you want, may not be the price you're hoping for, but a 60-cent rally in soybeans is better to sell 60-cent rally than to sell it prior to that. And that's what I try to focus on, especially this time of the year when farmers have to do stuff.
Yep. Understand what you're saying. All right, so let's talk a little bit about what you're hearing from your customers a little bit as far as overall crop conditions go. I've talked to guys in Iowa, Illinois, Indiana, Ohio, eastern Nebraska. Eastern Nebraska is getting a lot of rain, just like going north of there into Minnesota, into western Iowa, and you're seeing that still those huge rain patterns. Talked to some folks in in Illinois. So I hear really, really awesome. I hear it's okay, and I've heard it's going to be off this year. But it's very pocketed. It feels like, again, like we saw somewhat maybe a year or two ago when we saw something similar to that. What are you hearing from your customers on that front, and what do you feel like the overall consensus is right now for the corn crop?
I think the market expects ultimately that yields are going to come in above trend. I believe that's what everyone is expecting. Whether it's 182 or it's 184, we can all dial in what we think it's going to be. And by the way, doesn't mean that is correct. But I believe that's what the USDA is going to say. Remember, it's not, last year they said 177 yield on corn, and in the last WASDE report, they knocked old crop stocks down because they overestimated the yield last year. So we know just because they say it doesn't mean it'd be true, but the market will trade what they say.
Mm-hmm.
So I kind of feel right now, that I think the market is believing that where crop conditions are and the kind of crop weather that we've had, that we're going to be looking at the USDA coming in with a number something like 183, 184, give or take. And I think that's where the market is at. I don't think ultimately it's that good, but that's the number we're going to have to deal with for a little while when they put it out there, because I do believe by the time we get to September, they're likely to come up with that number, whether right or wrong. So
right on. Okay, let's bounce over and talk a little bit about what's going on in the cattle market right now. Cold storage reports supposed to come out this afternoon, and looks like you're seeing some decline in beef stocks right now, comparatively from what we saw, what's going on compared to last month, year over year. But I guess, Sean, as you look at that, what are your thoughts there, and where do you see that market heading?
I view the cattle market, and I continue to view the cattle market as two people with a loaded gun pointing at each other's heads. Both don't want to die.
Right.
At the same time, one is going to pull the trigger first.
Right.
And so what I think where we are is the market's deeply concerned about a slowing consumer demand situation, a worsening economy, what appears to be a risk-off trade going on, the stock market hitting. I mean, these are all things that tend to make consumers pull back from high-end beef demand. At the same time, when you're looking out ahead, the number of animals that are going to be coming to the market later in the year are going to shrink considerably. And if we get herd rebuilding going, it's going to be even tighter than we've seen, which makes it hard to say that the market really deserves to go much lower. I think deep down we're stuck in a sideways trading market as we have been through the summer, and I still believe that this lack of supply in the end will win out, and ultimately the cattle price will have to go higher. Even with demand is weak, it won't be weak enough to offset the lower supply. And so I think ultimately we will eventually later in the year work ourselves to the upside, but I don't think that's going to happen until we get through the summer.
Right on. Okay. Well, Sean, I think just with the amount of difficulty we had to get started here, we're probably going to wrap this up here. One more quick question. As you look at what's going on in Europe right now with some of the difficulties they're having, and you take a look at Australia and some of the difficulties they're having, you take a look at our overall wheat market again, kind of recap that a little bit. What are your thoughts there, and how do you see U.S. wheat playing into the overall marketplace right now?
Well, we're the only country that had a big wheat crop.
Right.
So, that's the reality. We had a big wheat crop. Now, the Canadian prairies wheat crop's shrinking. All that hot, dry weather, it looks to me like we're going to see, yields probably 5% below trend. But the U.S. crop looks really, really good. So overall, once again, I think, once we fully put the crop away, these prices stimulate demand. We're seeing good demand for wheat. The French wheat crop down 15% year over year. The Russia-Ukraine wheat crop down 15% year over year. Stocks to usage in exporters' hands relative to demand, the lowest in 30 years, 35 years. So once the U.S. is kind of put the crop away, and I think we're pretty close to that, we should see prices work higher on strong demand for U.S. supplies that are going to be needed to offset the holes that have occurred overseas. So I think it's a good situation. And for those farmers that don't have to sell off the combine or are able to, be a little more patient, I do think there's going to be some better prices to be cash selling later on in the year. Good
deal. All right, Sean, appreciate it, man. Folks want to reach out to you, get more information about what you're doing over at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. We also have a Twitter page at Faradex11, LinkedIn page. Sometimes we put posts out there that go over our work to see how we look at our statistics, cycles, and correlations. Would be of value to those that are watching and listening to your show.
All right, man. John, I appreciate you, and sorry for the trouble this morning, man. We'll hopefully have that fixed again for next time.
No worries. Sounds good, Casey. Thanks.
All right, Sean. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, LinkedIn at Moving Iron Podcast. Go to the YouTube channel, which is the Moving Iron Podcast YouTube channel. Check us out there if you want to see the live version of this. And while you still can, go to TikTok and you can see what we got going on over there. So with that, go to movingironllc.com for everything Moving Iron related as well. So with that, I'm Casey Seymour with Shawn Hackett. Let's go move some iron, folks. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately? Target the right buyers and close more deals? Reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.